Tech takes a tumble, but is it time to buy? Hey there, moneymakers. Today we're diving into the chaos that unfolded in the stock market. Man, oh man, today was a wild one on Wall Street. The trading floor was buzzing with activity and emotions were running high. The tech-heavy Nasdaq took a serious nosedive, dropping 3.2% on news of DeepSeek's latest AI model. This unexpected development sent shockwaves through the market. This thing is a beast, folks. It can write code, compose music, and even predict the weather with scary accuracy. The potential applications are mind-blowing. Investors are freaking out, wondering if companies like Google and Microsoft are yesterday's news. The fear of being left behind is palpable. But hold your horses. This kind of panic selling creates opportunities. Savvy investors know that market dips can be a chance to buy quality stocks at a discount. Remember what happened with the internet back in the day? Early investors made a killing. Those who saw the potential and took calculated risks were handsomely rewarded. This AI revolution could be even bigger. The advancements we're seeing now could reshape entire industries and create new ones we haven't even imagined yet. Now, I'm not saying to throw all your money at the first AI company you see. It's crucial to do your homework and understand the fundamentals. We need to be smart about this. Look for companies that are using AI to enhance their existing products and services, not just chasing the latest trend. Sustainable growth is key, and keep an eye on the valuations. Some of these AI darlings are priced for perfection. Overvaluation can be a risky game. Any hiccup in the stock could plummet. Market volatility is something every investor needs to be prepared for. But hey, that's the market for you. Always a roller coaster. Buckle up and enjoy the ride, because the journey is just as important as the destination. Speaking of roller coasters, the Federal Reserve is meeting next week and everyone's on edge. Investors, analysts, and even everyday savers are all waiting with bated breath. Will they raise interest rates again? The big question on everyone's mind is how aggressive the Fed will be this time around, how high will they go, and what will be the ripple effects across different sectors of the economy. The Fed's been trying to tame inflation, but it's like squeezing a balloon. Push down in one area, and it bulges out in another. You never know where it's going to pop next. This unpredictability makes the market a nerve-wracking place. Higher interest rates are bad news for stocks, especially those high-growth tech companies we were just talking about. These companies often rely on borrowing to fuel their rapid expansion. They make it more expensive for companies to borrow money and invest in future growth. This can slow down innovation and expansion plans. But don't despair. There are still ways to make money in this environment. Savvy investors can find opportunities even in a rising rate scenario. Look for companies with strong balance sheets and pricing power. These companies are better positioned to handle higher borrowing costs. They'll be able to weather the storm and come out stronger on the other side. Resilience is key in these turbulent times, and don't forget about value stocks. They've been out of favor for years, but they tend to do well when interest rates are rising. These stocks often represent companies with solid fundamentals. So keep your eyes peeled and your ears open, because the Fed's every word is going to move the market. Stay informed and be ready to act. All right, let's take a break from the stock market craziness and explore some other investment opportunities. First up, private credit. This is a fancy way of saying loans made to companies by private investors, not banks. It's a bit riskier than traditional lending, but the returns can be juicy, especially in emerging markets where growth is booming. Next, we've got good old-fashioned government bonds. I know, they're not exactly the sexiest investment, but they offer something you won't find in the stock market. Stability. Plus, with interest rates rising, bond yields are becoming increasingly attractive. So if you're looking for a safe haven for your cash or a steady stream of income, government bonds are definitely worth considering. Finally, let's talk about something near and dear to my heart: entrepreneurial opportunities. Over in the UK, they've got a bit of a conundrum. Their corporate pension funds are sitting on a mountain of cash and they're looking for ways to invest it. This isn't just pocket change, we're talking about billions of pounds waiting to be put to good use. This presents a huge opportunity for savvy entrepreneurs with innovative ideas. If you have a groundbreaking concept, now is the time to bring it to the table. Imagine pitching your startup to a pension fund with billions of pounds to invest. The potential for growth and success is enormous. The key here is to focus on long-term, sustainable growth. These funds aren't looking for quick wins. They want investments that will stand the test of time. These funds are looking for investments that will generate returns for decades to come. They are in it for the long haul. So, if you've got a solid business plan and a compelling pitch, don't be afraid to knock on their door. Persistence and preparation are key. You never know, you might just strike gold. The right opportunity at the right time can change everything. That's all for today, folks. Thanks for tuning in. Remember, knowledge is power in the world of investing. Stay curious and keep learning. Stay informed, stay agile, and never stop hunting for those golden opportunities. The future is bright for those who dare to dream.